one of the things that we would like to bring up to the MMTs is the fact that we're looking at the 1300 put, and I'm going to set an alarm on it right now. It's 45.30 by 47.90. It goes out to 317. It's a $1,300 put. We will start putting alarms on these things because from a daily perspective and a weekly perspective, when I go to that finding fact and conclusion, I'm looking at a $1,300 put on March. And I'm going to pull up that chart. And I'm going to go right here. And I'm going to show that on the daily, 1 week ago, this is a weekly. So prior to the first week and the holiday weeks, we've come from $120 down to 46. I'm going to set an alarm on this particular call, falls to 41.50, 38.90, and 37.70. That's falls to in the short term on a 317 March 1. Another one that I'm really going to focus on is the big money is buying up the 218 February put, and it's right over here on this weekly chart. And yes, that bear has been marked down from $70 a contract down here to the 14 by 1580, 17,000 traded below the market. And currently, let us not forget that the Dow is coming up and testing toward that 1300 area that we had talked about over the last couple of weeks for the bull case. And we're finally up there at that 1292 area. Set alarms on this one at 1150, 1060. Set me another alarm in the near term at $12.50. That's a 218, 1240 put. Set alarms. The next one of order of huge purchasing by the bears are purchasing the S&P. You can take a look at the next big one, 10,000 contracts traded today. You can clearly see where the contracts were $70 1 month ago, and they've marked them down to the lows today, and the lows are $16.50, and the high today was $23.85 on that one. Where the high was on 12/11, not even a month ago. Today is 110, 2012, but they were $75. So we're looking for how deflated you can get in the S&P and how imbalanced in a shorter term that markets can set up and then have reversals because of it. Another contract that I will focus on is this 1260 put. And why am I going to the 1260 put? And when does a 1260 put expire? Expires 218. 13,000 of them bought on this markdown. Now, let's take a look. That they were $45 a contract three weeks ago, but they're buying big on the put side of this market. Today they are. It's the first time from the European gap open up market. There's another one that we like, that we would like to point out to you. And once again, I'm just going to show it, that people are betting big that this S&P will never be close to 1290 by 317, and you got 13,700 contracts traded. And I've already gone over this one here. It's a 121 1250 put, just to let you know they're still buying them up. But these expire too quickly. But look at the volume paid, and you're getting that volume spike in buying on the put side. I mean, for crying out loud, for the March one, 1100 put, you've had 5,000 of them traded. I mean, the open volume, total volume traded, and these strike prices right here where my cursor is, these are all the put side that have traded, and we're only 9:19 a.m. Pacific Standard Time on 110 of 2012. Today, the 10th, 110/2012 is where all the buying is on the S&P. And that's the update on the S&P 500. We'll be on these. We'll set more alarms. Once again, yes, you can only get so inflated and so deflated. If I take a look at some of these calls, like that 1250 that we owned, it's way up here at $67 from the lows. And the thing about it is, when you take a look at some of the other ones that were, and that's a March contract, by the way. So when you take a look at where the 1250 call is today in January, let's take a look at the $1,300 call strike price. And they're buying these up at the bottom for January expiration. Because if you take a look, you can see that the call side's got 8,600 traded. And that's the only big bull one that I can see. And that's the $1,300 call, up $4.10 today off of the bottom. Okay? So basically, we'll be going through lots of them, and we'll find out the best opportunities that one can have in the S&P 500.